Hey everyone, so welcome. Really excited to have you all on the show and really excited for the conversation today. I think we have a great group here today to dig into different approaches to RWA, tokenization, and more importantly, what's actually working in practice versus what's just still hype. Quick intros. We have Graham Nelson from Centrifuge, who leads DeFi products. We have Val from Xtalks. He's the general manager at Xtalks. Andre, managing partner at DWF Labs. And Artem, chief RWA officer at Falcon Finance. So excited to have you all. Welcome to the show.
Thank you.
Thanks
Very
for
happy to
having
be
us.
here.
Yeah, great to be here.
Great. All right. So, just to start, I wanted to look back at 2025 that brought in a new wave of RWA energy, lots of narratives, lots of announcements. And I want to start by cutting through that and understanding what actually moved last year, which makes this year very promising, as we can all see. So Graham, let's kick it off with you. Centrifuge has been like an OG, right, since 2018. The team has probably seen multiple cycles, a few waves of RWA hype probably. What actually felt different in 2025 that moved the needle, according to you?
Yeah, I think it's a great setup for the discussion. Centrifuge, like you said, we've been around since 2018. We've seen different demand cycles through RWAs coming on chain from like early versions of private credit to a big lull, and then private credit not really working on in the way we expected. And I think in 2025 we saw a convergence of a few factors. One, the regulatory landscape, as we all know, became a lot more clearer. It wasn't so much enforcement action around all the crypto ecosystem. Secondly, we saw that treasury yields were a really interesting yield that would be beneficial on chain, that was competing with on-chain DeFi rates. And I think on thirdly, like with those two factors, there was a new on-chain demand for RWA yields. We can see from the institutional allocators like Grove, from the maker ecosystem, looking to get exposure to institutional RWA yield instead of crypto native yield from the DeFi protocols. And I think that was a big catapult going forward. And the stablecoin issuers, also on-chain stablecoin issuers, also looking to generate yield or diversify yield from away from DeFi protocols into RWAs, treasury yield or CLO yields. And we can see that. So like we can see from all our products, from the treasury bill product to our CLO product, also now to our private credit product with Apollo, that there's way more interest in these institutional RWAs coming on chain. There's capital on the sidelines on chain waiting to invest in these assets as well. And I think that's a big driver in 2025, which is a really exciting time. It was a great year last year. Centrifuge got to $1.3 billion in TVL. And so I think in 2026, we're just going to continue to see that grow out. And I think it's a super exciting time for RWAs on chain.
Definitely. Like you said, there were a lot of proof points that really moved the institutional appetite. And, you have those proof points today and, everyone's like kind of working towards that. All right, turning to you, Val, the Kraken deal was obviously a huge news for you guys. But I'm curious about Xtalks' growth that kind of like kicked off in 2025, which seems to have been driven by multiple factors, I guess, technology, regulatory progress, and perhaps maybe structural choices. Can you talk about how it was for you last year and what are you looking forward to in
Yeah, of course. Very happy to. I'll double down on what Graham had sort of mentioned. I do think that the regulatory landscape changing was a big driver. There was more clarity and more momentum towards clarity that I think got a lot of people excited and a little bit off of the sidelines a little bit to start participating, and specifically within Xtalks, when we think about tokenized equities, the structure that we've done tokenized equities with Xtalks is a permissioned issuance but permissionless trading. Frankly, really similar to what you'd see with a stable coin today. And that sort of structure we thought would just resonate really well with potential clients. And we see that it has. especially because in the macro market, so taking a look outside of just what's happening in crypto, there's been a real concentration in equity value along a handful of names, primarily in the US. And so being able to start to offer those names globally through a product like a tokenized equity like X stocks, we just saw a lot of demand. The idea that we're in sort of this AI super cycle, people want to get access to that, and because you have the public companies that are supporting this, whether it's Google or Meta or Microsoft, people want access to those equities, and so that was just an incredible driver. I mean, if you think about it, Xbox was really just launched in partnership initially with Kraken and Solana and a handful of others in July of last year, and already seeing over 200 million in TVL. And so it was an exciting year for us that helped build momentum into 2026.
Yeah, definitely. And there is also this huge trend of TradFi now using DeFi and RWAs increasingly more as a tool for different products and services that they can make them more efficient. So that's really interesting. All right, going to come to you, Andre. Zooming out a little bit, from your perspective as a market maker, as a capital provider, a VC, you play multiple roles. How did RWAs actually perform in 2025 in terms of like capital flow, distribution, and demand?
From a trading perspective, right, I would like to mention that the trading volumes are constantly increasing since X stocks started offering these tokenized stocks, right? Because it's very convenient for people to trade like all the possible markets, right? When crypto market is going down, but let's say stocks are going up, right? Crypto people seamlessly can switch from one asset to another, right, without any doubts or any need to change the regulatory framework or the trading platform, right? And we see the volumes are constantly growing up, and for us, like for a trading company, especially, it definitely makes sense, right? And we see a lot of demand, and this demand is only growing, right? And I do believe that this year will be much bigger for X stocks, right, and for tokenized RWA and also commodities than the previous year, thanks to regulatory framework, the overall market.
Awesome. On that note, I think it's been also very exciting for Falcon Finance. Also, obviously, we've integrated with X stocks and Centrifuge, not just that, but want to bring you in here, Artem. Falcon Finance is, as you know, building a collateral system, and so you're seeing this from an infrastructure side as well, right? What do you think last year happened, and what type of assets actually became usable as collateral that, in your view, that weren't really viable before?
Yeah, thanks for this question. And it's not that easy to add anything meaningful after that broad discussion by Val, Graham, and Andre. But from our perspective, so it's two main categories of assets that we're working with, and they became quite usable in 2025. First is yield-bearing assets, primarily tokenized treasuries, and a more limited extent structured credit like CLOs. So treasuries became usable mostly because, as well described, the yield was okay. The structure was much better than usual crypto guys were used to have. So that made them deployable at scale, not just theoretically attractive. So volatile real-world assets like equities or gold, for example. I think what changed wasn't the underlying asset. It was exposures that can be structured and distributed. So and I think it's quite important to mention that what really changed on the ground more broadly, it's sort of composability and exit mechanics. We started seeing real bridges between real world assets and crypto liquidity, like curated vaults, for example. It's a really good example. Or using opportunity to use yield-bearing collateral as a collateral in centralized exchange. That's a meaningful shift because it connects real world assets directly to trading, margin, and balance sheet usage. not just passive holding. But I think we're still quite early. So comparing to TradeFi, we're like a fraction of a fraction of a fraction. So yeah,
Yeah.
I hope 2026 will be definitely real world asset year.
Yeah, no, there was a lot of movement for sure in 2025, and that's why the year is off to an exciting start, especially for RWAs. And then we're going to talk a little more in detail about liquidity later. But before that, I think something that often gets overlooked are the fundamental design choices behind some of the products that we have, right, at Falcon, Centrifuge, and even at Xtalks, because they shape what's possible. And a lot of what you're saying kind of is kind of shaped based on the fundamental designs that we choose to pick, right? And it's a nascent stage for sure. um, on that note, I've noticed that Centrifuge and Xtalks have made slightly different design choices from a product perspective around tokenization. So Graham, I would like to bring you in about how often Centrifuge talks about ownership as a core aspect. Would really love for you to unpack what that means in practice.
Yeah, I think the challenge at Centrifuge, I mean, even in the long run, or I mean, in the short run, I think is how do we represent on-chain tokenization ownership effectively that sort of matches potentially an off-chain state. So for the last few years or so, it's very difficult to tokenize or like tokenize a product, but also like that on-chain representation also match or be the true source of record. And in some jurisdictions, it's still not the case that you can that the on-chain blockchain, like the on-chain ownership, is the actual ownership of the representation off-chain as well. And I think regulatory environments need to move forward to allow us to take that ownership approach, where the blockchain is the true source of ownership, and you don't need an off-chain share transfer form to transfer any ownership of these shares. And I still think there's a bit of regulatory involvement that needs to come in that area, and that could also help us design, when we talk about real ownership on-chain being the true form of the ownership. Today in the Centrifuge world, it's not really the case. We have an off-chain share registry as well as the on-chain share registry, and they sort of need to correlate or be together. And we are slowly moving, with our SEC registered transfer agent, that we can bring more of this ownership on-chain instead of needing to track this off-chain share registry ownership. And purely because of that, the challenges we face is that it makes RWAs in the form that we have today really difficult assets for DeFi native markets or DeFi native interoperability. It's very difficult to go and deploy something on a DeFi market because it involves some kind of share transfer. Who's the owner? Who's the true owner of the DeFi protocol? Who's going to be the owner of the share registry? Taking through traditional share registries through what that looks like, and there's obviously a big challenge there, and it sort of makes interoperability much more difficult. Especially, you can't go put an RWA that we issue into a Uniswap pool because that every participant needs to be whitelisted and onboarded, and it makes it very difficult to track ownership if it's not really the true form of ownership on chain. And this is where we last year launched what we refer to as DRWA. It's a wrapped version of the underlying RWAs, which comes with freely transferable properties where you have to KYC if you want to be able to mint the primary. But once you've minted the primary, it's freely transferable in the secondary market and go into DEXs, which really helps this ownership piece, right? It makes it really easy to own, distribute, and for users on chain to get access to RWA yields and get access to the different let's say products that we issue today. And I think that's really exciting. I think it's a big focus for us to build those products out into 2026. Right now, we're really at the infancy phase of them, and we really hope to, with partners that we're working with across like the EVM stack, but as well as Stellar and Solana, to really bring more of these assets types to their chains and then plug it across the entire DeFi ecosystem stack.
No, that's really exciting. DeFi and making DeFi and RWA complementary to each other. And I think that's also like really important for us to grow the RWA market as such. Well, shifting to X stocks, how would you describe the design, the fundamental design that you had chosen? I think there's some interesting aspects there as well, that you can walk us through.
Yeah, absolutely. I think that we had a philosophical choice around how we wanted to present and give ownership of X stocks to the clients. And so I touched on this a little bit earlier, but X stocks are permissionless token, similar to stablecoins. There's a permission issuance in a primary issuance standpoint, so the direct mint or redeeming. But once that's happened, then you can self-custody the token. You can take that into DeFi. We wanted to maximize the amount of composability that tokens actually had, because at least with our approach, we saw this as a way to help kickstart and allow the ecosystem to use the tokens to figure out, okay, what are the interesting ways that I want to use tokens? I think we talked about this a little bit earlier. We might talk about it more in depth later, but also around allowing that permissionless aspect so that people can start using these tokens and actually help start building liquidity across a whole ecosystem. And so that was a very important design choice for us. That while in some cases makes the design a little bit more challenging, we thought was just very important to allow the users to be able to do that, especially with the long-term vision, where we believe that over the long term, this sort of concept of internet capital markets that's being talked about in a lot of circles is something that's very important. And as we think about what that means for X stocks and ownership of equity, being able to do that in a permissionless way where you can actually start having real price discovery, not just the ownership, is very important. And we think a very broad ecosystem approach to DeFi will help support that. So that was very important for us.
Yeah, interesting. Super excited to see how it's going to grow into like even more adoption. So yeah, thanks for that. Coming to you, Andre, you always say that tech is the easy part, and the real for different projects and builders, that we talk to. You always tell them that the tech is the easy part. What you have to really prepare for is staying resilient, especially when the markets kind of hit stress points. I mean, in this case, in the case of RWA, where the designs, the technology can get a little complex, and it's really important how you think of these principles initially. What would you say they can do to stay resilient after they've made a specific choice? If the market hits stress points.
Uh, I think, look, regarding the tech side, right? The market is quite mature for now, and good tech is a kind of a baseline, right? We are not in 2016 or 2017 when a smart contract was rocket science, right? For now, it's like it's a necessary minimum to have, right? Good tech is you have to have, right? Then you need to build on top of that, right? And asking a question, right, regarding real world assets, I think the very important things is legal structure. Because the main pain point is if we can trust that the underlying asset is available and if it exists, right? If it is not just something, right? And then second thing is regulatory framework, right? That we should to make sure that there is no regulatory risk for the issuer, right? And that everything is done correctly. And what is also important, given that stress points of the market that happened last year, right? That DeFi and market oracles and price feeds are also working and signed correctly. That it doesn't create any artifacts like wrong prices that can cause to cascade liquidations, etc., etc. This is like super important, especially if those assets are being used for some DeFi money markets or something permissionless or something with very strict risk rules, right? When a minor mistake on Oracle side or on PriceFit side can collapse like millions or billions of $. I think tech is minimum, then legal side, and then the overall infrastructure and cooperation with important partners on the market is very important, because tokenized real-world assets, it's not just one company that tokenizes something and then relaxes and distributes its product, right? No, it is cooperations with exchanges, with DeFi markets, with oracles, with auditors, with custodians, right? And all this environment should be done properly. All this infrastructure should be done properly. Yeah, it's more complex, but I do believe that it is super scalable. And as I think everyone agree, right? We are on very, very early here, right? And it makes sense to spend efforts on it.
Yeah.
I'll co-sign on the technology being maybe not easy, but straightforward, and it's everything else that you have to do around the technology to make it work. XStocks supports 24/7 trading. The markets aren't open 24/7, but XStocks has a 1-to-1 backing by the underlying equity. So how do you actually enable 24/7 trading? Well, it's working within the ecosystem with market makers, with other partners, to make sure that you actually understand what should the price be when the market's closed. What are the right factors to look at? What happens at the start of the market on Monday morning, and what happens with that arbitrage? All of those factors are frankly much more challenging and much less easy to figure out than the underlying technology itself. The underlying technology for something like XStocks is actually really simple. It's a 1-to-1 backed token with underlying equity. It's actually very straightforward. Everything else is what makes it an interesting product.
Yeah, no, 100%. I think you guys have super awesome, well-oiled infrastructure, and that's one of the reasons we're here, excited about the space. Also, touching upon collateral, what makes an asset actually usable as collateral? Artem, I think this is something you'd love to throw light on. Give us some examples of live Falcon products or anything exciting that's upcoming, where you look at specific RWA assets and want to bring them, want to use them as collateral.
So we are quite proud to be partners with both of the participants, and Graham and Val, with Xstocks and with Centrifuge. So our goal is basically to provide liquidity, to be a liquidity provider and infrastructure that provides liquidity for every asset in real world or in crypto. So when we're looking at the real world assets, so we look, I think, from two different points of view. So the first sort of lens is real world assets as a core collateral for the protocol. For example, we would like to use like tokenized US treasuries as a core collateral for the protocol to create some sort of liquidity buffer. What does it mean, and what's important here? I think, of course, legal and this ownership first model is quite important. We want assets that are conservatively structured, transparent, and reliable. From that perspective, legal packaging is clearly a positive, but being a lawyer, I can say that legal correctness alone is not enough, right? Legal liquidity and exit still matter. If an asset is perfectly structured, but effectively illiquid, with slow or uncertain redemption, it's very hard for us to rely on such an asset in practice. So the second lens, or the second point of view, is real-world assets as user-provided collateral. So we are building the protocol that allows any other type of collateral to be used to mint synthetic dollar. So from this point of view, here friction became the key issue. Every extra permission or operational step reduces the number of users who actually bring the asset into use. So you can look at many tokenized treasuries and see that they're held by, I don't know, 10 or say 100 of wallets. That's not necessarily bad, but it limits adoption for sure. So yeah, for us, I think it's not a philosophical debate. Ownership first or liquidity first model is right or wrong. I think both of these models serves different purposes, and issues like Xtalks and Centrifuge show us like two different approach. And there's a lot of other approach in the market, but I believe for every if an asset solves the particular problem, we can work with this asset, and I wouldn't describe any model as like better or worse. Yeah, so
Yeah, no, 100%. Also, it's interesting that you mentioned tokenized treasuries because, in reality, tokenization has really solved the ownership problem for us, but there is a little bit of a liquidity gap we have to kind of like work towards. I mean, for example, if you see the market is really dominated by tokenized treasuries, but a lot of them I would say they have limited on-chain activity as of now. Obviously, it's growing as we speak, so that's exciting. I think I want to bring Andre in here. In your view, how can we really bridge this gap? And what are the main reasons? Is it like more fragmented marketplaces, more, like you said, legal? So regulatory clarity is definitely there, which is starting to, become better now, or something else?
Yeah, I think, look, I think first of all, right, all this market developments, they're following the demand, right? And this demand that we see now from retail crypto users and not retail crypto users to trade tokenized stocks and commodities, right? Drives a lot of TVL, drives a lot of volume to these assets, right? And many other companies will try to kind of capture this trend, right? Which is good for the market in general because some of them will die, some of them will survive, but together they will kind of improve the current market structure and bring something new, right? Something like innovative, right? Which is great. And also, as we mentioned in the beginning of this conversation, right, the overall regulatory clarity and especially the US regulation made a lot of good things for this business model, right? And for the all tokenization and that fact that some exchanges, like I mean, TradFi exchanges, they're looking to open 24/7 trading, for example, Nasdaq, right? It is great for this market because it will make things easier to tokenize because it will solve these gaps that well mentioned, right? For example, if market closed from Friday till Monday, right? What is the fair price on Sunday? Someone needs to identify it. But if the market trades 24/7, it's already more straightforward, right? And I think we will see much more and many more assets that are already tradable, right, and liquid to be tokenized. It is definitely stocks, it's commodities, it's debt, it is treasury bills and bonds, right? And the rest, I know, will follow. But what markets we see?
I think that's an interesting point. You see what TradFi is doing as well, and I think they're maybe we on this call are a little bit biased, but maybe for us it seemed obvious that we're moving in this direction around things like 24/7 markets and tokenization many years ago. But TradFi is finally seeing it, and it's become broadly obvious for a lot of people, and I think that is exciting and helps push the momentum there. We're taking something and turning these, in our case at Xdocs, tokenized equities from just a primitive into something that can be used and composable in sort of many different ways. And TradFi is finally seeing that and is starting to do and support things in their own way. Usually a little bit slower than how quickly things happen in crypto, but it's still happening. I think that's an exciting part certainly for this year with the TradFi announcements.
Yeah, and I think there is a lot of debate on valuations as well. I mean, I think I don't know who's the right person to touch upon this, but should we have frameworks around pricing, because that is going to impact a lot of what we are seeing, whether it's liquidity, expansion of the entire market. For example, how do you price a single digital token that represents, say, a slice of commercial building or like a private credit loan? So where do we stand in terms of the frameworks around pricing RWAs at this point?
Yeah, I can touch upon this because I think it's a common problem, and I will try to be quite practical here. If we cannot price the asset well, if there is no price discovery, then maybe it's not worth to tokenize it and to use it like on chain. Because we've seen a lot of attempts to tokenize some illiquid, super interesting assets like collectible cars, like emeralds, I don't know, your villa in Dubai, and nobody knows how much does it cost. Nobody knows. Nobody knows how to check the status of this asset, how to be sure is it alive, is it worth it or not. So I think, and I think it's quite practical. If we cannot have a price discovery, then maybe it's not a good time to use it on chain.
And another point that why X token and tokenized treasuries and tokenized private debt is growing, right? Because it's widely tradable and traded assets, right, on TradFi, for example. But when we touch, for example, real estate, even on traditional finance, real estate is not a liquid asset. It is kind of very low asset with a very, very low liquidity. And then if we move like, but TradFi market is the biggest market, right? All the money is TradFi, right? Crypto is a part of it. And then if this asset is illiquid on this big market, we tokenize it and try to sell on the small market. It doesn't seem that it will be more liquid here, right? It seems like it will be even less liquid here because it creates even more uncertainty, right? And to decide right things to tokenize, it's also, I think, it's art of tokenization. Yeah.
Mm-hmm. Interesting. Yeah, also talking, so Graham, wanted to understand a little bit about, the products that you have, the JTRSY and JAAA, how has been the activation around these products? I mean, from what I understand, you've been able to activate a lot of like institutional wallets here or interest, and what's really coming and how are you expanding this further?
Yeah, I think also I wanted to just touch on, you asked a question earlier to, I think to Valentin, just about the growth of token holders. I think,
Yeah.
or like the limited growth. I think we still need to look back at 2025 to 2026 where we are. And I think like the token holder base of US Treasuries on chain at the start of 2025 were 13,000. And today in 2026, January, it's around 55,000 or 60,000. So, like it's an enormous growth. If you look at the entire RWA ecosystem growth over the last 12 months as well, from a holder basis point, it's enormous, right? It's gone from like 100,000 to 500,000 or 600,000. So the growth is pretty organic, and I think it's driven by the likes of, X stocks and Ondo equities, and what we're doing at Centrifuge, as well as all our RWA competitors building these products. And I think it's showing a real organic demand for these products on chain, which I think is like a great driver, actually, like of where the space is going. I think for Centrifuge, real focus is that like, we work really hard to bring the best in class assets on chain. And, for JTRSY and JAAA, with our partnership with Janus Henderson, which is a top 5 global asset manager, the idea is that really we want to offer these really top tier tokenized products to the best institutions on chain. And that's where we work very closely with Grove from an institutional capital allocator in the Sky ecosystem. And I think that's really where the growth is, right? There's not many other on-chain capital allocators who have $1 billion to allocate into RWAs today single-handedly as like the maker ecosystem. And so, growth of these top-tier products are a bit more challenging as we try and source more institutional allocators who are looking for yield. There are a lot of competitors in the market as well who are also offering similar products. And so I think it's by design, right, where we want to grow it. We also need to be careful on like we have strict for these primary funds, strict onboarding requirements. It's a regulated fund that you need to be a professional investor in, and this sort of limits your on-chain accessibility for capital when you create these funds. And I think it's why we're working really hard to build out these more free transferable permissionless products, because that really opens the floodgates and that entry point into like RWA's on-chain. I think that's really just our focus for the year. It's like I said earlier, is to grow this product. And I think, yeah, I mean, I think that really covers like where we're at when we focus on that. I think it's like being really clear about what our targets are, and we know who we're targeting for both different of our product bases and where the demand is on chain. And I think it's just doubling down on that.
Yeah, no, I think it's interesting how you've been able to kind of make sense of a lot of these moving parts around these products, and glad that it's moving forward. Excited about it. I think another angle here is distribution, which is something like Andre mentioned. Xtalks has done a great job, like turning tokenized equities into actual financial building blocks, so to say. Which brings me to you, Val. Do you want to talk about how did you achieve this, and how should other companies kind of look at this?
Yeah, it's a great question. I mean, I think for Xstock specifically, we don't look at it and we don't think of it as a Kraken product. Kraken is obviously a big part of what we're doing. But when we launched Xstocks, we launched it as an alliance, and that's how we've tried to continue with the product, where we're going out to other centralized exchanges. We're going out to multiple chains. We're going out to the DEXs and lending protocols, many, many others. And we're asking them to come into the alliance, and we're doing this in a very real way. When we say alliance, I mean, we're sharing commercials and economics. We want to make sure that it makes sense for everyone, because to your point, the Xstocks tends to skew very retail. There's massive retail demand for this product, but people have to be able to access it. And as of today, Kraken isn't everywhere. And sort of to get people the access that they want of the product, we have to do it in a way where it's open and it's ecosystem focused. Kraken as a whole has been very partnership focused over the last couple of years, and that ethos has really culminated into how we think about Xstocks. And I think that our philosophically our thought is that the breakout moment for tokenized equities or Xstocks specifically won't come from a new regulation or institutions. It'll come from builders. Maybe someone listening from this session will build the app that makes owning tokenized equities as natural as sending a meme. And so distribution is just such an important part of that. So we want to make sure that it's available to anyone and everyone that wants it. That's why we have such great partners as part of the alliance.
Yeah, I know a lot of builders will be really excited to listen to this different take, because I think most RWA companies are kind of like talking about institutional adoption, but it's really interesting to see that we have a lot of opportunity for builders to kind of come in and build the right products. All right, so really helpful conversation here. I just want to wrap up, but before we do that, I want to check with each of you what's really the bull case for RWA. I think Val, you already mentioned about the builders, but if you can also touch upon the right use cases, what kind of right use cases would look like for builders as well, and then what are the existing risks that we need to address as well. And we can just go around the table and get your final takes. Maybe Andre, do you want to kick it off?
I think, look, regarding the bull case, right? I think we should expect that the overall growth of tokenization or of tokenized reward assets, but with different quality of these assets, and the total kind of overall integration of the tokenized reward assets into the crypto and DeFi ecosystems. Completely understandable by the market participants, integrated to many different and various protocols, and to have some form of kind of common compliance structure, right? When people know that, okay, this is good assets to be integrated. Now we can say something like this for example, stable coins or synthetic stable coins or whatever standardized crypto project, right? But for RWA, we don't have this kind of common standards now. But yeah, we need to have them.
Awesome. Artem, what do you think is on the horizon?
Yeah, I think let's do some reverse thinking, and let me be sort of bearish on real world assets. So I think a lot of what worked in 2025 was heavily relied on proper regulation and adoption. So right now we also have a few major sort of milestones regarding regulations that we need to achieve. This Clarity Act and a lot of debates regarding Clarity Act, I think, can go wrong. Yeah, it's a bearish statement, sort of. We'll do in reverse thinking, remember. So I think another risk is usability, as Andrei just mentioned. So if tokenized real-world assets remain hard to integrate, hard to reuse, and everything will be operationally fragmented, I think tokenization will become more like an overhead than a benefit. And also very interesting scenario when tokenization and all this real world asset sort of narrative ends up being mostly an internal corporate tool. Remember, like 2016, 17 blockchain is good, crypto is bad. Everyone was trying to implement blockchain everywhere, and I see a lot of attempts right now. Like we'll try to improve back office process with adding like DLT technology, but not actually changing how the market works. So we've seen versions of that before, and it doesn't drive real adoption. So as you understand, tokenization doesn't magically remove risks or fix bad economies. It only works when it solves like clear problems for a large enough group of market players, participants. So bullish case, everything in reverse. So Clarity Act will pass, a lot of convergence between TradeFi and DeFi, real use cases. So yeah, honestly, I'm quite bullish, but we'll need to push this market really hard from our point. So yeah, happy to be here.
Thanks. Anything to add, Graham, Val, from your standpoint?
I mean, I can go quick. I think 2026, the bull case is, well, I mean, I can definitely say from the centrifuge point of view is that we're seeing more and more asset issuers feel like they're missing out. And so, you know, these asset managers are feeling like they're missing out by not being or on chain or tokenizing a product. And we'll see more and more come on chain and tokenize these assets. I think the question will be if in 2026, will there be sufficient demand for this flurry of asset managers who come on chain, and will there be enough demand on chain to justify the time and effort that they go through for tokenizing their products? But I think we'll see more asset managers come on chain, more funds. There'll be more demand for RWAs across the board from a variety of different DeFi protocols or different stable coins or synthetic stable coins, institutional allocators across the board. And I think that'll be a super exciting period. I agree with Adam in terms of, you know, we need some more regulatory oversight. You know, we can be very clear that today, like, tokenizing products isn't about cost saving. It isn't about cutting out a lot of like back office services. Like obviously that's the long-term vision about what we're doing at Centrifuge, is to be that whole one back office system to tokenize your assets. But today, you know, you're not replacing those back office systems. It's a bit like of an experimental game. And I think that'll need to take some time to improve over a period of time as well for that to be the real bull case in 2026. But yeah, bullish in general. I think a lot of like teams are doing an amazing job of bringing a variety of different RWAs on chain, from the equity business to treasuries to private credit. And I think, you know, as a consumer or as an institution on chain, it's still a great time to be consuming these products because you have more than just one option, which allows you to do the due diligence, the risk analysis. It's not just, you know, one asset on chain that you're sort of limited to buying. You have a choice of 10 treasury bill products that you can do your own review on. There is now, there's X stocks and under stocks, but there will be, I'm sure, 5 competitors to those products by the end of 2026 who are going to also be offering a variety of different products. And I think that's great for the consumer, and it's great for just RWAs in general on chain. And I think I'm super excited to see how that plays out over the next 12 months. And hopefully we can be sitting in a 2027, sync like this and talking about the trends. And it's really just been another great year from token holders on chain to total value secured or total value locked, right? Has also exponentially increased. And I think that's really hopefully for the bull case.
Yeah, no, I would love that to sit again in December or January. But yeah, like you said, the exciting thing is that we're past the theoretical stage. These products exist today. There is real capital being deployed, and we're learning what works by actually doing it. So that's exciting. Huge thank you to all of you for a genuinely informative conversation today. And for everyone watching, do your own research. And this is not financial advice. Thanks for joining, and we'll see you next time.
Thank you.
Thank you.
Appreciate it.